What's up, my babies, and welcome back to the Wall Street Ben Black Playbook. Your girl missed you. I did not have access for so long, but I finally do, and I'm back. So I had to ask my babies, what is it that y'all want for the first video, the welcome back video? And a majority of them said, we need to talk about swing trading. We need to talk about it. So we're here. This is going to be the easiest swing trade video that you will ever watch. This will be the only swing trade video that you ever need, I promise. So let's get into it. So I am looking at Amazon right now, and I'm here on the weekly time frame. So as I look on my weekly time frame, which I kind of think is easiest to start off with on your weekly and then go down to the daily. The reason being is because there's less noise. All right, there's much less noise. Now, if I'm looking for a swing trade, I would never be on the 5-minute chart. I would never be on the 5-minute chart. Let's not overcomplicate it when it comes between us trying to decide, am I day trading or am I swing trading? It's all has to do with the time frame that you're looking at. I could see a bull flag on the 5-minute. Maybe I would be able to swing trade it if I went on to higher time frames and I saw a signal that was already set up. But more than likely, that's a day trade. If I saw a bull flag on the weekly or on the monthly, that would be a swing trade. Don't overcomplicate it, my babies. Keep it simple, and it matters on the what matters is the time frame that you're on. All right. So with that being said, as I'm here on the weekly time frame, it's very clear that this held it as demand and this held it as a supply zone. All right. And this is going all the way back to 2018. We see that we broke above it in 2020. 2022, we kind of consolidated here. We formed a base. It broke out of that base, but as it pulled back to retest this support zone, it broke below it. And since October of 2022, this 105 has held it as supply. All right. Now, as we go through, and this doesn't matter if you're doing a day trade, swing trade, you're looking to hold it for long term, as in you're going to buy a leap contract and all of that. I am always looking in these 4 steps. I look at structure, the trend, price action, and then the indicators. All right, top down analysis, these 4 steps every single time. So let's get into it. All right, so let's come down here onto the daily time frame. I'm still in love with this level, and here about this 105.04 for where it is that I would want to enter. Now, overall, we have to remember that supply zones, they're an entire zone, right? So if I look to the left, I can see that this entire area from the 105.04 to about down here at this 101.41, this entire acts as a zone in here, right? When we were over here, it held it as a demand zone, and we see that it got the push-ups in here, held it very firmly as a demand zone in here. We did break above, but came back to respect it, right? Or I apologize. We see that when it broke below, now we started to hold it as a supply zone, respected in here, and we're still respecting it in here. So therefore, looking at this, I would love, if I was trading this to the upside, what I would love to see is for this to break above the 105, pull back to confirm this as the new demand zone, that it will hold it as support, and then enter that way. Now, what we might also see is that this ends up rejecting in here, and when it broke back below here, right, the zone that we marked off, I would look to trade it back down here towards this demand zone. Look how either one of these gives me an entry for a swing trade. Again, there's nothing different that I did except the time frame. I am looking on a higher time frame, therefore it will run longer than it would if I was looking on my 5-minute time frame. All right. So based off structure, we already have our setup there. I would love to see Amazon above 105.04 after it's confirmed it. Or I would love to see Amazon break below this 101.41 and then look to trade it back down towards here to this supply zone there, right? That's just based off of what I see per structure. So now let's get into the trend and see what that tells me. Now notice we're still on the daily time frame. So now what I'm going to do is mark off my primary trend line. All right. So the primary trend line is expected to run for several months up to perhaps even over a year, right? 1 to 2 years. Let's think about the post-COVID bull run that lasted for over a year and a half, almost 2 years, where we just ran up. Let's think about 2022, the bear market that we entered into. That was for a majority of the year. All right. So your primary trend is expected to be that trend for several months up to a year, possibly even more. All right. The reason why it's important to remember that is because it's just natural for us to have what I like to call a natural bias when it comes to the market. But it's important to remember that we protect ourselves in either direction, whether the market is going to break to the upside, break to the downside, or simply consolidate and trade sideways, right? We have to be prepared for either thing. I'm prepared for this to break above, break below, or to trade sideways inside of this zone. All right. So with my primary trend line that I have marked off for my support, I do see that we are making higher lows. Now, the reason why I do not have my trend line down here, perhaps I will, right? Because if this breaks above, I would expect us to come down towards this area right in here. And then hopefully we get that third bounce and trend back up, right? And maybe when the time comes, I will move my trend line. But for now, I want to place my trend line where I'm getting the most touches of support. All right. Now we do see that did this break below this trend line here? We closed below this day. It gapped down to open a little bit lower, and we see that it did come down, respect this support demand zone support area, right? And it bounced back inside. We got this bullish engulfing right on the demand zone, right on our primary trend line, and then respected and went. Y'all, exceptions happen all the time. It's just we need to keep up with the trend, and this is the trend. This is what it has held for most times. All right, so now I'm going to mark off my resistance trend line. And if I started here for support, I want to look up and see that this is where it started for resistance. This was the high that made this low. So I'll start my trend line here. So if I'm tracking it, again, could I draw it up here? Yes, absolutely. However, I'm seeing that as far as the highs, and I'll extend it here, honestly, we're making equal highs. We're just about making equal highs. So what chart pattern is this? Because as I'm looking at my trend, the trend lines are going to help me be able to recognize what chart pattern is in front of me, right? So we have equal highs and higher lows. This is an ascending triangle, my loves, right? We see the buyers are putting in all that work and sellers aren't really doing anything. We love to see this. So based off of my primary trend, I would expect us to go ahead and get this push up. It would be nice. It would be lovely. So now we're going to look at price action. Now let's check out price action. Again, right in here at the bottom of our of the zone that we have marked off, we do see that we got this bounce off of there. And this is a very strong, this 101.44. We see how many times it has resisted it. But when it doesn't, we do get this move up from this 101.44 here towards this 104. That's beautiful. That might even provide a day trade, but maybe that move might even happen within, just one single day. It could. When Amazon wants to move like that, Amazon does move like that. Other than that, it might just provide us a swing trade as it did these days, right? Now, I don't want to play inside of this zone. I will be looking for it to break below, or I will be looking to play above for a swing trade, right? I want to catch the move of it breaking outside of this chart pattern. All right, now when I look at indicators, the indicators that I like to pull up first, especially as I'm just annotating, charting, going through, looking for a setup. The indicator that I like to pull up is going to be my moving averages. So here I like to use on TradingView, the one that I like to use is the moving average ribbon. The reason being is just because I can get 4 moving averages and 1 indicator, then you don't have to use all of them, right? So I'll pull this up and we have the color code right up here at the top, but yellow is my 20, blue is my 50, purple is my 100, and red is my 200. So let's check it out. So I see that we do have the 20 crossed above my 50. Love that. We got this bounce off. We're trading above the 20 and right here above where I would want price to break out to the upside, we have the 200 at this 107.28. Love that, love that, love that, right? So we have a move from this 105.04 to this 107.16. Apologies, where my moving average is, the 107.16. So I really like that. Let's look on the weekly. Let's go up a time frame and see what we see. And here at the 107.91 is where we have our 50 on the weekly. So this 107 to 108 is a very pertinent level that if we break outside of that, we should get this run. If this breaks the 50 on that weekly, which again is right in here, just about in congruence with the 200 on the daily. Love that. So we already crossed the 50, the 100, the 20, the 200. This looks good. This looks really good. Now, I also like to look at MACD. I am a fan of MACD and its signal on these higher time frames for as far as getting me in and out of trades. They work amazing as support and resistance levels, as entry levels, however you want to word it. They really give you brackets, these levels within this self. Like right here, so we have the 20 is sitting at 140, right? So honestly, this is telling me that I would want to take this trade below 101.41, which I marked off. And the first level that I would be looking at is here at the 20, which is the 140. And then the next level I would look at would be my 50, which is the 98.30. And if it breaks the 50 on down here to my 100, which would be 95. Those would literally be the levels that I would trade down, right? If we broke outside of the zone that I marked, I would trade these levels down. Those would be my targets. Those would also be my stop losses, just all of that. It comes, I think that the moving averages, they come ready-made for you, baby, with your profit targets and your stop losses right there. So adhere to them, okay? Now, one thing that I want y'all to note is I haven't gone down to the 5-minute or the 15-minute. Why? I'm swing trading. What can the 5-minute do for me for a swing trade? All right. So we are on step 4 here. Where's my little box? Where's our box? We're on step 4. Oh, did I delete the box? Guess so. That's all right. When it comes to us looking at the indicators. So I have that marked off, saw what I needed to see as far as that. So now what I like to pull up is going to be the Fibonacci levels. I also think that the Fibonacci levels are great when you're marking off your profit targets and your stop losses, right? I think that those are great because what it is it's marking off retracement levels where price could possibly retrace to, right? So let's pull up. So in this case, we're extending because we are making higher lows, right? So I'm going to pull up the Fibonacci extension level. Now, the one that I just pulled up was the automatic, but I'm also going to manually draw it. But I do like using the auto Fibonacci levels. So let's go in and check our levels out compared to where they have theirs. And because look at this right here at the golden ratio where the 0.618 is right where we marked off our level, our supply zone at this 105.04, and they have 104.93. So, or the Fibonacci level has 104.93. So love it. We did that. Now, the 0.5 is also where price could possibly reverse. And we see that on Friday, the last trading day that we have pulled up here, Friday, that it rejected. We got this upper wick rejection right in here at this 103.28 at this 0.5. So Amazon breaking above this 103.28 and moving here to this 104.93. I want to point this out. Don't let me lose y'all. We've already decided that we're going to take Amazon to the upside when it breaks and confirms when it breaks and then pulls back to confirm this 105.04 level, right in here where the golden ratio is on the fib. However, I can see for a day trade that if this was to break 103.28, right in here where the possible reversal happens at the 0.5, that I could trade this up to the 104.93. This just might give me early entry into my swing. This would make a great day trade. This would make a great day trade, which could turn into early entry into my swing, right? Especially if I'm already in right here. And then I saw that let's say that this happened Monday, right? And then I saw that it broke above this 104.93 and maintained it. I'm already in the trade. I'm already making money, right? It already happened. However, if I don't day trade it, that's not bad. I already marked off above this 104.93 or where we put it at the 105.04 that a break and a retest above here is where I will want to take it. Now, let's say that this did break above our supply zone, and when it pulled back, it rejected. It doesn't hold it as support, but it ends up being a failed retest and it falls back through. Y'all. So now the trade is reversed. Were we looking to trade it to the upside because it broke that level? Yes, but we were also looking for it to successfully retest it. If it does not successfully retest it, then we know that it's rejecting and it's going back down, okay? And then that's all we do is we trade it down. You have your natural bias, but you trade whatever the market gives you. You cover yourself in every direction and you trade whatever move the market gives you. Just because we have our natural bias and it didn't go that direction doesn't mean that we were wrong. It means that the house always wins, but we can still overcome and beat them because we took the time to protect ourselves, whether it broke to the upside, downside, or traded sideways. All right. Do not overcomplicate it when it comes to swing trading. Do not overcomplicate it. So, all right, we love that. Now, let's say that this did do a failed retest, and as it came back down, right? This is when I would possibly move my trend line, my primary trend line, to down here, right? Because I would expect it. Let's clean this up, actually. We have this here and in here, because remember that your trend lines are set to mark the lows and the highs. The lows and the highs are shown on the wicks, all right? Because if it rejected here, I would expect to see it move back down towards my trend line here. I would hope that we would not break and then come back down towards the demand zone, but baby, if we did, I'm buying. I'm going shopping. If Amazon breaks this primary trend line, even when I move it here, I'm going shopping. Amen? Amen. All right. That's where I would move it for them, but let's move this back to where we are now, right? And it might even just, I might not even have to move that trend line because it might reject here, come here, and then continue its path up, right? All right, so let's take the extension off now. So we have looked at the structure, the trend, price action, and indicators. So now let's write our entry and exit levels out here on the top, and then we'll go down to the 1 hour. And actually, before we move on to there, let's change this red because right now it's acting as a supply zone. And then let's also annotate these gaps. Now, when it comes to gaps, depending on the way that you've learned, the language that you want to use, we could also say that gaps, these are also like the liquidity grabs that are made, but I always like to point out to people that gaps turn into supply and demand zones, all right? So right here, we see that we have this gap. This is the original gap that was made right here, which is from the close of this day to the, well, all the way up here to the open of this day, honestly. Because a gap happens from the close of one day to the open of the next day. Apologies. So this is actually right. And then we have this gap that was made this day, and then the gap that was made this day. All right. So it's important for us to remember that above here, we do have a gap that has been unfilled. So this one was filled this day, right? So we will go ahead and move to here from the close of this day to the open of this day, and then from the close of this day all the way down here to the open of this day, right? So when we do break above this 105.04, this is my overall target goal, is this 110. And possibly even up here to the 112, purely just because this gap, remember, it's from the close of one day to the open of the next. So I'm actually going to go ahead and move this all the way up here. So my target is going to be up here near the 113. Yeah, and we'll change this color purple. Does that even show up? No. Right. All right. So this is a gap. So therefore, to the upside, my profit target is in here at 113. For a swing trade. For the downside, I am looking for it to break below this 101.44. And overall, now this is where I would come in and draw a retracement level in here. Now, I like to eyeball my retracement levels and place them myself. So simply what I do is I just look for inside of this range, inside of this demand zone, semi-supply zone that I have marked off. I like to look, I use the term reaction level, but also like replacement level, right? Like where does the price pull back and react to on from the upside and the downside? And I like to mark that off. And we see right in here that this is where the price reacts in between these levels, where it reacts, where we see change of structure, or retracements, whatever terminology you want to use, depending on if you learned how to trade through strat, ICT, supply and demand, trend lines, right? Whichever way it is, it's a reaction level that we see in here. So I see that there. So to the downside, this is where I would look to my overall target would be this 96.27. All right, and then let's pull it up and check it with the extension, right? We want to check and make sure that that level makes sense. And looky there, right here at the 0 line, 96.29, we marked off 96.27, and boom. And boom, shakalaka. Now let's see if we were to move that trend line, if that would make sense. It could possibly, my trend line might be a little bit off in there if I moved it to the bottom of the body versus that looks like that's kind of making a little bit more sense in there, right? And that is how I set up and look for my trends, look for my swing trades. Now, the biggest question I get is how do you stay in? Baby, that's because I'm not going to come down here and look on the 5-minute. I'm not going to come down here and look on the 5-minute. The lowest that I'm going to go is the 1 hour. This would be the very lowest that I would go. And honestly, my loves, more than likely, I'm not even going to be on the 1 hour. I can see what I can still see the price and where the candle is here on the daily. I don't need to be on the lower time frame to set an alert. I don't need to be on my lower time frame to set an alert. I'm going to set an alert at every single one of these levels, or a little bit before every single one of these levels. And as long as the price doesn't hit that, I'm still in that trade, because if I found the setup on the daily, I need to stay on the daily to maintain the setup. Make sense? All right, my babies, you can do this. There's nothing that different. There's nothing that different. Now, in my opinion, the easiest thing to do when you are looking for a swing trade is look for the chart pattern. And if you go in this order, especially looking at your structure and then you look at your trend, you're going to see the chart pattern. Look what we found right here. We found an asymmetrical triangle, right? And an asymmetrical triangle is a bullish chart pattern. Did I just say asymmetrical? I think I did. I definitely meant an ascending triangle. So let's write that up here. We went and hunted us down an ascending triangle. And we're going to trade this. We're going to trade this and we're going to make money off of it. All right. I know y'all can do this, my loves. History repeats itself, and Wall Street been black.